Happy Friday, traders. Well, we've got a bit of a quiet end to the week with markets, but markets are ending the week trading risk on, trading bullish. So, what is moving markets? Well, look, we've had some important inflation data come out in the last 2 days, on Wednesday and Thursday. Firstly, with Wednesday, we had US CPI numbers. They came out as expected at 3.4%, but look, that is lower than the previous month of 3.5%. And so we've had 2 months in a row now where inflation has eased lower with no upside surprises. So the market certainly didn't like that. And yesterday we had US Producer Price Index, PPI. Market was expecting their year on year for that to come in at 4.9%. That actually came out lower than expected at 4.7%. And from the previous month of 5.5%, that was well lower. So over the course of 2 days, the market has seen inflation cooling somewhat. And again, the key takeaway is that there was no upside surprises. So look, market has liked that. So if we have a look at bond yields, US 2-year yields, they closed yesterday down at 4.14%. Last week's highs, multi-year highs, was up around about 4.35. So we're 20 basis points lower than last week's highs. So we have seen US 2-year yields lower, which obviously market likes. With US 10-year yields, they're trading around about 4.64%. Last week's high, multi-year highs, is around about 4.75. So they're not down as much as two-year yields, but they're down about 10 basis points as well. So look, they are backing away from very elevated levels, and obviously levels that the market was starting to get very concerned about. So that is a positive. If we look at the Fed Fund futures and what they're pricing for the September rate decision now, post that data, that's now only pricing in a 30% chance of a rate hike. That's come down a long way because post the last Fed meeting, market pretty much priced in a 70% probability that the Fed was going to hike in September. So we're seeing basically the market starting to price out the Fed even hiking rates in September now. So that is what is moving markets at the moment. Equity markets obviously are enjoying that. Equity markets don't want rate hikes, they don't want high bond yields, they want the opposite, and they've been getting that in the last few days. So S&P does what S&P always does, and it's made a new record high overnight. So certainly that is obviously bullish. With S&P, it's been one of the best trending markets for the last couple of years, or few years obviously. And buying the dip has been the strategy, the gift that keeps on giving. And look, it's very hard to say exactly when this is going to stop. So I'd suggest not fading these new record highs as look, that strategy really hasn't paid any sort of dividends. With Nasdaq, yes, we're above 30,000 again. Not at record highs, we're about 2% away from those. But obviously, if S&P continues to do what it's doing, then no doubt Nasdaq is probably going to print new record highs too soon. So other markets, look, the currency markets have been largely pretty much sidelined and dead this week. Haven't seen any really big moves. Surprisingly, the US dollar really hasn't sold off on the back of the cooling inflation numbers and the bond yields lower. And at the moment, dollar yen, which has been the biggest focus for the market, it's actually risen pretty much every single day this week, even though we've had some moment sell-offs post the data. The market has come back big. Dollar yen's back at 159.50 as we speak, so it's almost back at 160. So it really can't get any momentum from what's happening with the inflation numbers coming out better than expected, and also bond yields marginally lower at the moment. So no doubt it's probably a concern for both the Japanese and the US, who have had coordinated intervention. And at some stage, I mean, they have said that they won't hesitate to intervene in the market again when they see fit. So intervention risks certainly are live, probably above 160 again. If we look at precious metals, obviously they've had a fantastic run recently, but it looks like they have hit a bit of a brick wall. Technically, gold yesterday, it actually posted a big bearish outside range day. The close was actually lower than the previous day's low. The close below the low of the previous day. So that makes a bearish outside range day a bearish key reversal day. So it signifies that, at least in the short term, we've put in a significant top. So I'd suggest, if you're chasing gold fresh long for, maybe short term to see it back above 44.50, that's probably not going to work out. I'm not saying gold can't go up, but it looks as if topside at the moment, we've certainly met some decent resistance technically anyway. As we move along, other markets, Bitcoin, it's the weak link in markets, continues to be that way. Even with risk on markets overnight, we did actually, trade briefly below 63,000. So at the moment, I'd imagine, and if for whatever reason risk did turn, I'd imagine it probably will have a run back down towards that key support at 60,000. But yes, sellers certainly are lined up towards 65,000. I think that's going to be a hard level to get through, and certainly the levels to get short. And finally, crude oil. Crude oil overnight, look, there was no news from the Middle East. Don't know whether or not the market took no news to be good news, because we did see crude down about 2% overnight. It's trading back in the low 80s. But we do have gap risk coming up, because we do have a weekend. And every weekend for the past month plus, we have seen decent gaps on the open on Monday. So you're certainly going to be wary of that. And at the moment, obviously a lot of the news, when it does come out, it has been negative headlines. And look, you also, traders can't dispel that potentially, at some stage, maybe there might be more military action or surprise attack on a weekend. But look, buyers at the moment, it's probably, it's buying dips and being long crude. In any case, at the moment, look, we are going into the weekend, trading a little bit quiet, but again, yes, we are trading risk on, but just be careful for weekend gap risk. Good luck with your trades, and we'll check back in with you shortly.